I don't like dynamically because, yeah, it's true, I know there's an imbalance, liquidity, and everything. However, what tends to happen is that every time that I take a trade in a dynamic way, I feel like, and I'm pretty sure you guys can relate this as well, is that hey guys, back with another video. Trade Forex here, and in today's video I'm going to be touching the next very hot topic, which is the take profit part of the risk management series I've been doing lately. And I want to say a massive thank you and a lot of love to you all, because I got a lot of good appreciation, feedback, and comments around the two other videos that was around break even and the stop loss protocol. And I am very happy to see that a lot of you gained so much value and had so much impact those video on your trading journey. And this one as well, I promise I'm going to drop tons of values in order for you to start finally having the different variables which are part of the risk management. So in this case, break even, stop loss, and take profit. After you finish watching this video, and if you have not watched the other two videos, I highly suggest you to put all the information together, start pulling out the different variables that I have provided in each and every single videos, and I promise you're gonna start seeing some pattern or some narrative around your risk management framework that will help you to trade with more confidence. So this being said, let's get started. So the very first question, you guys can see I have got 4 bullet points. Sorry, it's around 5 bullet points. I'm gonna be discussing each one of them today. And let's start with the first one. So the importance of take profit and why it matters. So obviously we are here, everyone is trading and everyone's trying to learn in order for them to make money, to make a source of income, to make a source of living, all of it. Now, this is like probably when you're trading, that's what you're aiming for. However, you guys have to understand that whenever you're doing a mentorship or whenever you're trying to learn, one thing that many people literally miss out a lot is the fact that when they learn, they just focus on and try to understand how to take profit, and that's it. So what do I mean is that, it's like when you go for a work and let's say you're a corporate life, you do a 9-to-5 job. Usually what happens is that you get trained for a bit of time, and when you finish your training, you start doing your job and you feel like, oh, okay, I'm starting achieving my results because I'm implementing everything that I've learned, so therefore I'm getting great results. However, that's not the case when it comes to trading. So when it comes to trading, take profit is not everything. And the reason why it's not everything, because actually the most important part of trading is understanding your losses. Okay, so this is going to be linked to the last video I made around the stop loss, because when you understand how to deal with your losses, right, how to keep your losses minimal, then you will see how your take profits skyrockets as far away as possible. Okay, so I know and understand that because that's how I started as well. When I started trading, I was like, okay, I'm watching 1 video, I'm watching 2 videos, I'm watching 3 videos, I'm watching 4 videos, I'm learning it all. So that means if I see, let's say, support or resistance, or let's say an order block or an FVG, I know when price is going there. As soon as price hits that level, I'll be definitely making money. Okay, that's the way how many people like start the trading journey, because they feel like as soon as price is coming, let's say in this resistance zone or support zone, they're like, okay, I know if I take a buy, I'll be making money now because I've watched other people doing that, and I'm pretty sure if I keep doing this, I'll be always making money. No, that is absolutely wrong. So you guys have to understand the degree of importance you have to place on your take profit when you start building your risk management framework. So why this is important is because then you don't become very delusional, right? So your expectancy start becoming like it is gonna be like split in 2 parts, which is take profit and losses, because there has to be a balance between your take profit and your losses. Now, this seems very silly and stupid probably for many people, but believe me, so many people, they just look for this. They just want to make money without having the stop loss. And when they do his stop loss, they are always so frustrated, so angry, so mad, because they're like, I'm putting so much effort. Why am I at a stop loss? What's wrong with this? What's wrong with the mentor? What's wrong with the mentorship? In reality, there's nothing wrong with anyone. It's just the way it is. That's the game of trading. Okay. Now, this was, let's say, a wider overview, basic overview of the importance and of the take profit and why it's not everything. And when you guys to understand, that if you start, putting the two together, which is a take profit and stop loss, I can promise you that you're gonna see a very important improvement on your equity curve, but most importantly, a very important improvement on your own emotions. Because once you start accepting the losses, right, as a part of the game in trading, trust me, everything just becomes more beautiful. And it took me quite a lot and a very, very hard way for me to learn that, but eventually I realized that that was the way to go for. And now, this being said, on point 2, now you guys can see that I said how people take profit while they're trading. So there are 2 ways that I've seen most of the people taking their profit, and I'll be definitely going to the chart showing you more example about it, but for now let me explain you what are the 2 things. So the number 1 is most of the people that I've seen when I started trading, they trade according to pips. All right, how many pips they can catch on a daily basis, on a weekly basis, on a monthly basis. That's like their objective, that's their goal when it comes to trading. While other people like myself, for example, I love to go for risk to reward. Now you might be wondering, is there any advantage in using one and using the other one? To be honest with you, is both of them that are aiming for the same thing, which is making money, right? Which is hitting the TP, making money. So I wouldn't go in depth saying, oh, why one is more important than the other one. But if you would personally ask me my point of view, I prefer risk to reward approach with RR instead of getting with the pips, because I feel like I have more control over my risk. While when you trade with the pips, it's like if you say, oh, I'm gonna be making let's say 10 pips, right, in one day. So you'd be like, oh, I'm making 10 pips a day. Then obviously that's beautiful because you're focusing on your TP. But the question is like, how about your stop loss? How many pips you're putting as a stop loss in order for you to make that 10 pips? And if so, how much you want to take out from that 10 pips? Okay, so this can be very different based on the scenarios that happen. So for example, let me just delete all this drawing so I can give you a little bit of insight. All right, so when you go like pips, all right, so for example, you have support and resistance, and what can happen is that sometimes you might have a very big stop loss where you go, I don't know, let's say 20 pips while the stop loss, and then you'll be like, oh, I still need 10 pips. Some other time you might have, let's say, 5 pips stop loss, and then you're still targeting the 10 pips. So what happened by doing so is that your risk start becoming dynamic, it start fluctuating, starting being different. So honestly, I don't like that. What I love the most is like 20 pips, 5 pips, or 10 pips. If I have whatever pips, I want to make sure that I risk 1 to get, let's say, 1 to 5, 1 to 10, 1 to 20, 1 to whatever I'm targeting for. So it's way easier for me to focus on that and having a very systematic approach that I can replicate over and over again. So that's just a personal point of view. But then obviously people that are trading just taking the pips, the way they do it, they definitely have their own advantage on that. So I'm not saying they're wrong, I'm just saying it's a just different philosophy, the way of seeing the market or taking that take profit, right? So I hope that's clear to you guys. And now I'm going to the most important one, which is actually, no, that's not the most, this is important as well, but the next one is even way more important. So the third point is the dynamic and static take profit. So what do I mean? Some people, when I say earlier, they trade with pips or they trade with the risk to reward. And then some other people, when it comes to take your TP, like your final TP, they have one with some technical targets, right? So let's say people that trades liquidity and someone is probably down here, right, taking a trade, they'll be like, I'm taking a buy because I see liquidity here. So what I'll be doing, I'll try to take, let's say, full volume over there, or let's say partial over there. Or some people might be like, you know what, I see an FVG, so you have, let's say, an imbalance here. So what I'll be doing, I'm probably taking a bit of partial over here and the rest all the way up there, because from a technical point of view, that's what I see right now going on. So that's what the story telling me, the market telling me. While some other people, and again, this is something that I use as well, is that I don't care if I have FVG, if I have, I don't know, let's say liquidity, whatever. If I'm down here, right, and let's say my target is to make 1 to 5, I take the buy, that's going to be 1 to 5, that's it. I mean, I don't care what's going on over here and there. The only thing, obviously, I do take in consideration is that where the market is going, which is the order flow. Is it going up or is it going down? So I rely a lot on the direction towards supply and demand, which is the next supply zone, which is the next demand zone. But the only reason I do that is because I have to make sure that I have enough space in order for me to make the RR I'm looking for. No worry, I'm gonna go on the chart and I'll show you this better, right? But for the time being, that's what I'm explaining to you. So this is static for me, okay? No matter what happened, no matter what is the liquidity, no matter what is the FVG, whatever, if I know I'm bullish, I'm taking the buy. And if my target is 1 to 5, 1 to 10, 1 to 50, 1 to 20, I close at that. If it gets there, fine. If not, then that's it, done. If I want to take partial, the same story. I don't care if there is an FVG or whatever to the left. If I hit, let's say 1 to 3, 1 to 4, I want to take partial. Once I hit that, I close it. And that's it. I let the rest run. So this is static, okay? Static TP. Well, when it comes to dynamic, is exactly what I explained over here, which is based on the technical point of view. So as I said, no worry, we're going to the chart now, and I'm gonna be showing that way better. And I'll be bringing the point 4 and 5 on the chart as well, so you guys understand better what is going on over here. So let's now come all the way up here. I still got the markup of the video I made around the stop loss. Okay, so check this out. Now, for example, let's take one second. Let's take this range over here. What's going on? Oh, actually, no. Let me take something. Okay, no, that's fine. That's fine. Let's always use the one that we used before. All right, check this out. So what's going on over here? For example, we can see. I don't know if you guys remember from the stop loss video. I was explaining this trade and why I was going for a buy. You guys can clearly see price eventually took me out. Then it went in my favor. Then it came back down here, but I did not take any more trades. However, there was another beautiful trade over here. This one. And you might be wondering why I've taken this trade. Why would I have taken this trade? Well, simply because this buy was for me valid to make a new high. But as you can see clearly, price has failed to do so. We're still in the bullish range. So therefore, this break was absolutely valid for me to go for a buy. Here we go. So here where the example now starts about the dynamic and the static take profit. So when it comes in, let's say, dynamic, someone that is trading, let's say, liquidity or imbalances or FVG, that will be now having a lot of point of interest. So let's say they have this liquidity here, right? Some other liquidity over here. Some people might be like, oh, look, there is a trend line liquidity over here. And then you have another liquidity over here, right? Some other people might be like, oh, okay, I'm taking this FVG because that's the only imbalance I can see. So price need to fill this imbalance, right? Or maybe somewhere around here. So as you can see, based from your technicalities, like from a technical point of view, if you take this trade, if you're taking this because you've seen the shift of momentum, you're gonna already start having 1 target, 2 target, 3 target, 4 target, 5 target, and all of this. Now, this is absolutely fine and it's perfect because from a technical point of view, you know market seeks for liquidity, or if you watched ICT, you probably guys know already that it's all about liquidity. So therefore, there's nothing wrong with it. However, that's dynamic, but when it comes static, the way I do it personally, I'm like, okay, I'm taking the trade. What is exactly I'm expecting from here is to see price making a new high. Why? Because with order flow, we are bullish. This low made the high. I'm expecting to see at least price getting where? Sorry, all the way up here, make a new high. Now, along the way of this trade going towards my TP, I can decide also to do another thing, which is taking the partial. So for example, people that are trading dynamically, taking the TP dynamically, then I can say, okay, the most important liquidity zone, let's say, is somewhere here because there is a huge zone with a lot of trend line, build up or whatever. But in the meanwhile, as I see all this FVG or liquidity internally, am I going to take TP1, TP2, TP3, and then probably TP4, right? That's someone dynamically that will do that. While me, if I use the static way, what I will be doing is like, okay, every time 1 to 3, I'm taking 50% out. Or every time 1 to 4, I'm taking 50% out. It's not that I'm doing it, but I'm saying that's how we'll be taking partial, right? Now, the final TP all the way up there. That's it. If I get it, fine. If I'm not, then, it's okay. Now, you guys might be wondering, okay, so what is the key difference between the two? So me personally, based on my experience, I can tell you that I don't like dynamically because, yeah, it's true. I know there's an imbalance, liquidity and everything. However, what tends to happen is that every time that I take a trade in a dynamic way, I feel like, and I'm pretty sure you guys can relate this as well, is that your emotions start taking over your rationality. Why that? Because you might see a liquidity grab and you get scared because now the liquidity has been taken, you might gonna see a retracement. Or you might see price feeling the imbalance and then you see like this quick absorption, right? You get scared because you're like, okay, what if now he's retracing, taking me out? Like, you understand what I'm saying? And what happens is that continuously, every time that you're taking a trade, you start just getting emotionally overwhelmed because you just have every time a different TP. Sometimes it might be 1 to 2, sometimes it might be 1 to 3, sometimes, like for example here, just look, let me show you. I got literally the best example over here. So let's say I didn't go wicked out over here and I was taking my TP in a dynamic way. So what would I have had in this case is that I would have probably, 1 second, let me take the arrow. Okay, cool. So I would have had probably this one, it's a liquidity, then let's say another important liquidity, and then let's say I got FVG over here, and then I got another FVG over here. Sorry, I marked it in a wrong way. All right, cool. So what happened is that now you guys can clearly see that from this buy and this buy, that's what happens. So this one, the first target is 1 to 4, the second target is 1 to 7, and the next target is 1 to 10. This is dynamic, all right? This one is 1 to 2, 1 to 3, and then so on, 1 to 4 and 10, okay? So what happens is that in both cases, like for example in this one, you see, here, price reached your TP1 or TP2 and you didn't get retracement. So you were cool with it, right? But look at this one. Here, let's say you enter somewhere around here, price taps your first TP and then comes back, takes you out, and then shoots to your direction. So you can clearly see that at that point, you will be constantly looking at the chart and be like, oh, what if price is giving a pullback? Why if price is doing this and that because you reached the target? But in my case, the way I do statistic, in a static way, right? I don't get that because I take the trade. I'm like, okay, I have the range, which is, the whole range that I'm looking for in a large scale, which is from here to here. And I expect price to make a new high. 1 to 3, if I have to take partial, like always 1 to 3, I take the partial, or finally 1 to 10. You guys see where I'm going with this? So basically this is bringing me to the 0.4, I think. Let me see. So this one is bringing me to 0.4, which was literally what I just said so far, how the TP can affect your emotions as well. Now, I'm not saying that doing the other way is wrong. Absolutely not, because there are so many people doing the way I said in a dynamic way, but that's because they're comfortable with it, So the reason I'm sharing with you this is because those are the two key variables that you can find when it comes to the TP. Of course, if you have something different than what I've mentioned, you are more than, good to go with that as well. But these two are the most common and the most used in circulation. So I hope me giving you this breakdown, the way I explain it to you, the logic and the why of having this emotional impact and all of this gives you a bit of insight on how you should be taking and structuring your own way of managing your take profit. Now, the final point, which was literally saying the personal view based on my experience, I think I literally already said it, which is the static. So I love to go the static way because it helps me just to stay away emotionally, and eventually, as I always say, everything works. You just gotta make sure that you stick only with one protocol and one process on doing that. I hope you guys gained enough value, enough information from this video. If yes, please subscribe, thumbs up, and make sure that you guys watch these two videos around the break-even management and the stop loss, because I promise you, if you watch the three of them together, you're gonna see that there is always an A or B, okay? You don't have like A, B, C, D, E, F, Y, like all of these variables. No, you're gonna have always maximum 3 to 4 variables. Once you have those variables, you will know how to take them out and pull them together. Like for example, in take profit, now I gave you the two variables, which is the dynamic and the static take profit. So you already know that you can start working around these two things. You don't have to go crazy, okay, on thinking a different other way for you to take profit whatsoever, okay? Of course, you are always free to do so. However, those are the most easiest and objective way for you to handle it. This being said, I see you next time, guys. I hope you really enjoyed the video.